All right, so we'll go ahead and get started. And, so like for the next 4 days, we're going to be pretty much doing like mini series. I'm trying to give you guys like very like value information packed with it not being so much. So these first 4 days, they're really just going to be about, um, I guess, like psychology and kind of like where you should really be putting your attention to, especially if you guys are just starting off. And I think whether you're experienced or not, I think that the things that you'll find that we talk about are going to be pretty useful. Um, I've been trading for 8 years, and in those 8 years, there was a lot of mistakes that I made. And you, as a new trader, your goal is to, in a sense, make mistakes, right? Because making mistakes is just the necessary ingredient. If you want to get good at something, you have to fuck up a little bit. So through what we talk about today, it's my goal to make it where you don't have to make as many mistakes as you normally would have had to because I've already made a lot of them for you. Um, Not to say that you won't make those same mistakes, but at least you will be cognizant of them. And honestly, that there's a lot of value in just that alone. Um, but in terms of like charts and stuff like that, if you guys want to look at something or you guys have questions, I'll look at the chat periodically. But um, yeah, so let's get started. So before we kind of start talking about like where you should focus be relative to what's on your chart, um, just a few things I kind of want to skip over, um, that are not related to the chart, like uh, not seeking the approval of others. Every single trader that I've met that I consider to be very good or just on a professional level, they're not really searching for approval from their family, from their friends, from their coworkers, especially if you have not learned how to do this consistently profitable yet. Doing something like that, telling your friends, hey, like, I just started trading, so just letting you know, like, if you guys see me come up, like, there's gonna be signs, like, doing stuff like that, or, you know, telling your parents, or, telling your coworkers at your job, like, hey, I'm gonna be out of here soon, boys. Like, doing those kinds of things, it's gonna put an unnecessary amount of pressure on you because as you're learning to do this and you realize that maybe it's not as easy as you thought it was gonna be, um, you're gonna have those kind of people chirping. You created that expectation that hey, you said you were gonna leave and you're still here with us. Um, so that kind of thing, don't seek approval from others. Don't be, you know, posting on Twitter looking for likes and stuff like that. Wait until you've actually got this down and you understand what it is that you're doing. Um, Learning risk management, guys. Like I'm not gonna spend too much time on this, but everybody here, I'm sure, has had some experience with trading, whether it be good, bad. Um, you guys, I'm sure, know kind of that feeling that you get when you're trading and you want to go fast. You want quick money. You want to prove to yourself as quick as possible, I can do this. I can make a living doing this. Because in reality, for sure, it is one of the best jobs in the world. There's so much freedom, the amount that you could make, the the star the stars are the ceiling. So when we just talk about risk management, just very basic, like guys, if you're chasing ridiculous percentages, you're not being professional. Uh, it's gonna bite you in the ass. You don't go to your job right now and say, I'm gonna make 10K today. I'm gonna try and just make my whole salary in this week alone. Do it slow first. If you guys have ever done like a martial art or something like that, you know that everything you do first is slow and it's intentional. You have to get the movements right, and trading is very similar. If you go fast, you're gonna get your ass wrecked fast. So take it slow. Watch yourself. If you can make a consistent amount of money, and it's just even if it's like 60 bucks a trading day, and when you lose 30. If you can do that consistently, if you have a win rate that's over 30%, you can make money. You know, a lot of people don't know that you can be you could be wrong what is it? You'd be wrong 7 times out of 10, and you can still be profitable and make money in these markets. Only if you have the proper risk management. Okay, and moving on, focusing on one asset class, which I assume most people here are probably here for crypto, um, which, it's not a bad thing. Crypto's a relatively new asset class, so it's very exciting. The moves on there can be pretty crazy. So, focusing on one asset class, if you're going to focus one asset class, then okay, choose two correlated assets. Now, what do I mean by that? If we look at Bitcoin and we look at Ethereum, relatively they have similar charts, right? We went down, we go to ETH, we went down, right? These are correlated assets, and as we progress through the different series, we're gonna talk about why that's important at all. Why would we want to look what how could we improve our edge by looking at both of these assets even though we're only trading one, right? So if you wanted to do indices, you would be looking at ES and NQ. If you wanted to do commodities, you would look at gold and silver, right? But just choose one asset class, two correlated assets, and keep your focus there because, again, you start trading everything that's available to you. You're like a dog in a meat market. You're not going to know what to choose. You're going to be running around the whole time. Um, and less is more in this game. The less you have to look at, the less components that are in your system, um, the simpler everything is going to be. And that's what you want. You know, a lot of you guys, when you go into trading, I know you feel that, that anxiety like kind of coming over you, and it's because you probably don't have a plan, and you don't feel that when you go into work, right? Um, you don't feel it because when you go into work, you know what you're supposed to be doing, right? If you're, I don't know, let's just say you work at McDonald's, you get there, you punch in, you get on the cash register, you take orders, you give change, you know what it is that you're going to be doing. And in the next series, that's kind of what we're going to be talking about is how can we build a system, which is the last I guess before we start looking at the charts and stuff like that is the last point I kind of wanted to gloss over. Um, that you have to look to build a system. There are things in the chart that repeat every single day, right? There's patterns, right? And I'm not talking about triangles, I'm not talking about wedges and stuff. I don't trade that kind of stuff. Um, but even so, there are things that repeat in these markets every single day that you can take advantage of that can allow you to make money. You just have to find them, whether it be through a mentor teaching you their system of what they're looking at, whether it's you going into the markets every single day and looking for what that is. You do need a system. You need a rules of engagement. I need to be able to come into these markets and say, all right, when I get to the chart, I'm looking at the weekly, I'm looking for X, Y, and Z, then I'm gonna drop down to the 4 hour, I look for X, Y, and Z, and then I drop to the 15 minute, I look for X, Y, and Z, and then I enter, right? You need something like that. Otherwise, you're gonna be trading based off of just how you feel, and that's something that you don't want. You want to turn yourself into a robot almost. That's you're just following the system, right? You can have, step one, two, three, four, right, five, and when you go into the market, if you see all of these things, right, then you can take the trade. Okay, so now that we've kind of had like covered a little bit of the bases, just psychological wise. Um, we can talk about like some of the things, right, that I look at, right? I want you guys to be able to walk away with something a little bit practical. Um, so let's talk about some of the things that I look for. So I'm not going to teach this pattern. It's very simple, but if you want, there's an indicator that will do it for you, right? It's completely free. Um, you just type in wick, and it's going to be the wicked fractals, right? Or you could do the traditional one, which is Williams fractal. Uh, but we're just going to use this one. So what this indicator is doing right now is it's going to map out every single swing point, okay? And swing points are one of the many things that take place in these markets that you can find elements of repetition around them. Okay, so all it's doing is super duper simple, right? If I look at this candle and I look left and I look right, and this is lower than the ones beside it, then we qualify this as a swing low, right? And the opposite would also be true. If I look at a high and I look left and right, and this candle is higher than the two beside it, then this is a swing high, right? Super simple. Um, it's a three candle pattern, and you're just looking for the highest between the three, right? So as you can see, every time it gets marked, they all have that in common. Left, right, this is the lowest. Left, right, this is the highest. Okay. So the reason that I'm showing this to you is because this is just one of the many ways that you can start kind of thinking to yourself like, maybe I could build a plan around this, okay? So let me show you something kind of cool. If we go back to 2021, right? What marks the top? It's when we take out a swing high without closing above it. The candle does not close above, right? It candle closes here, right? And then we go lower. What marks the bottom back here in 2021? Same thing. We take out a swing low, right? Does this swing low get hit again? Nope. Gets swept, right? We call that a sweep when we do not close below it, and that marks the bottom, right? We get another local bottom here, the same thing. And some of you guys may already um, know this pattern as turtle soup. That's typically what it's called. Um, there was a group of traders called the turtle soup traders. They made a lot of money trading this pattern. And this was back in the day. But as you can see, right, like we can go on, and you can find the most important tops and bottoms get formed this way almost every time, right? This is one of the ways, people think that I'm super duper smart because I've called a lot of tops and bottoms. And I'm just looking at stuff like this. Very simple stuff. Obviously, I have more to my system than just this, but this is one of the key components, and it's not complicated at all, right? Everybody here that's in the Discord, um, hmm, let's see. Can anyone else like, I don't know, like confirm if you guys can hear me in the chat? Let me know. Maybe sneak. I don't know if it's just DZ or okay, cool. Yeah, so I think maybe it's on his side. Um, Let me just let him know real quick. All right, cool. So, like I said, this is not complicated, right? If you guys have questions about this, we can talk about it. We got an hour together. Um, and again, like everybody that decided to show up, that means something to me. And I want to make sure that you walk away with something, right? And it this whole first series is if I had to start all over, what would I tell myself? And this is the conversation that I would be having with myself, okay? So once again, right, we can look just a small little study session together that that keeps on happening over and over again, right? Where all of the major market tops and bottoms are marked in this exact same way. right? We could keep going. Um, if you guys look through my Twitter, you're gonna see every time something like this happened at a key level, I was like, all right, get ready. Probably gonna go back up again, right? Even this last really big dump, once I saw that, I'm like, bro, all right, we're probably going a lot lower. And I got a lot of attention for those posts, you know? So even if you guys can't trade, you can still make money, you know? You could still get opportunities. You know, you could be up here speaking if you're providing kind of like value in this way. So when we look down here, right? Why am I not ready to hop into lungs yet, even though Soul is kind of moving up kind of fast, right? It's because I have not seen what I see every other time we put in a major market bottom, right? There's no sweep. Here are the lows. So these lows right here, this is where my attention is. I still think that we're going lower, and I still think that we have to sweep one of these before we start moving back up, right? So once again, what we've gone over just now is just a swing point, swing highs and swing lows. And now think about if you're a spot trader, you're not going to enter any positions going long until you see this, right? So if we did have a rules of engagement, it would be something as follows, like I'm not going to engage in longs until I've seen a swing low be swept, right? So as you can see, you know, this is how you start to build a system. First you have to find something, right? And now let's get a little bit more technical, right? What's another thing that I really look at? Um, and this right here, what I'm about to tell you guys, I know it's gonna sound like, I don't know, it's not a very sexy answer, but to be honest, if you guys can implement this, your trading is going to be significantly, I don't know, it's just going to be better, you know, and what we're looking at here, so purple box, that's going to be Asia session, right? This is the time um that Tokyo's trading, which I think it's a little bit off actually. Let's see. GMT -5. To fix it? No? Okay, fine. Um, anyways, we have Asia session, we have London, right? Session here, and then we have New York. Okay, so why am I looking at these time windows? Okay, so first let's get a little bit realistic. Most of you guys here, you guys want the sauce of um, how can I be a day trader, right? If you're here because you want to be a long-term trader, you want to be the guy that sits in a position for a few months, like this will still be helpful for you, but in reality, I'm here talking mostly to the people that you want to make this your living. You want to be able to do this as a job. You want to be able to wake up and not have to spend 8 hours of your day to make your check, right? Because in reality, for me, these time windows, these are the only times that I'm interested in trading. Anything outside of that, I don't touch it, okay? So once again, rules of engagement. I am not to engage in any form of trading unless I'm in a key time window. And if we kind of zoom out a little bit, right? And you start looking at all the swing highs and swing lows in these markets, you're going to notice something that most of them are taking place during those key times that I just shared with you guys, okay? So um, let's, oh, I think my mic died. Am I coming through okay? Yeah, okay. So looking at these key times, right? We're looking at Asia from 7 to 12 a.m. Okay, I'll go ahead and I'll just put it here. That's going to be Asia session. 2 to 5. That's going to be London. And there's a little bit of a debate of like what's better to start trading 7 a.m. to 12 p.m. New York. Uh, but I really think that if you guys are just starting off, start looking from 9 to 12. Okay, that's going to be New York. Okay, so these are your key time windows. These are the times that you want to be looking to be engaged in price. If it's not one of these times, then you probably, I mean, it's not to say that you can't make money, you know? I could give a, I could put a monkey on this chair right now and tell him to click buy or sell and he might make money, right? Doesn't necessarily mean that it's a good thing, right? And that's another thing you guys need to watch out for. Just because you win trades doing this kind of thing, like don't let that give you confirmation bias and make yourself think like, oh yeah, I took this trade using this method I found on TikTok, therefore it must be really good because I won the trade, right? No. You would have to fucking take that system, go and back test it for a year or two, and then you let me know if it actually does work or not. But once again, if you guys can confine yourself into trading within these time windows, I promise you, your win rate's going to go up. Because when you're trading in times like these, right? I mean, this is the weekend, so I guess we won't use that, but like you trade outside of these times, usually you're going to be caught up in consolidation most of the time. And so one of the things I was going to say is if we kind of zoom out and you start looking at when all of the swing highs and swing lows are made, check it out. Right here, when is this swing high made? We look at this bottom right here. It was made at 9 a.m., right? What time was this bottom? 1 p.m., right? Top 4 p.m., which in reality New York has a AM session and a PM session, so it would be 9 a.m. to 12 and then 1 to 4. Um, so that's why you'll see things like this where like 4 p.m. that's where the high was made before we came all the way down. See this swing low, 9 a.m. This high, 10 a.m. This low, 3 a.m. And I'm not cherry picking. I honestly haven't really been looking at this chart too much because I'm still waiting. I'm still waiting for what I just told you guys. Um, but yeah, so these are the time windows. Make sure you have them written down. And so far, look, we're making a rules of engagement together, right? And this is what you want because um, if you guys don't have this, to me, you're gambling. If you don't have a plan, you're gambling, right? If you want to be the guy that trades based off of intuition, that's fine, but you know, you're not gonna feel that confidence where for me, in my system, I could go to FX Replay right now, which is a software that lets you go back in time to test your strategy. I can go to FX Replay and show that my system yields, let's say, 60% win rate uh, for the last 3 years, right? That kind of confidence, when I go into the market, I'm not afraid. I I already have the data. You see what I'm saying? Like, if the data is there, why do I feel the need to rush? I'm gonna take a modest amount of money or I'm gonna lose a modest amount of money and I'm just gonna let my edge play out over time, right? So that kind of first rule that we had, and honestly, the first rule should be the time rule, okay? Um, engage during key times, right? Because if you guys stick with me in this little series that we're doing, you're going to start to see that we're going to keep building on this system. And at the end of it, you're not necessarily going to be using my strategy, but whatever strategy you do decide to do, you're going to understand what the nuts and bolts look like, right? So that should be everybody's first goal, What system do I want to start creating, What do I want to start um what kind of trader am I? Are you super impulsive? Are you going to be the guy that's on the 1 minute because you're not a very patient person? Are you going to be the guy that's trading on the 1 hour because You know, you're very stubborn. You don't switch positions very easily. Um, these are all things that we're gonna kind of figure out by using this. So first one, engage during the key times, right? During the relevant trading sessions. Number two, not engaging with price until a swing point has been taken, right? Because the reason that this works so well is because above and below these swing points, there's stop losses. And if you guys ever want to catch any sort of big move, that's like a criteria that you have to look for every time. And it's like I said, right? We could jump back to the weekly real quick, just to look at that demonstration, right? We can see highs get taken, shoot a lot lower. Lows get taken, we shoot a lot higher, right? And it works incredibly well because who's getting stopped out above here? The people that went short. Who's gonna want to jump in when this high gets taken? Breakout long traders. So think about like how efficient that the market is, that it induces short traders, it takes them out whilst also inducing long traders just for them to also get fucked, and pretty much the people that were short were right, but they were too early. And then we get that big move. Okay, so that's another one of the reasons why you want to, start building your system around things like this that you can see that happen over and over and over again, right? And another variation of that would be fair value gaps, right? Which are pretty common. Most people know about fair value gaps, right? If you guys look at these three candles, you can see that candle one's high does not touch candle three's low, and it creates this gap in here where there's only buying going on, right? And as far back as all the way at the bottom, right? Once again, we're looking for things that repeat. And here it is, right? Here's another thing that repeats. These fair value gaps. When we're bullish, we expect them to be respected. And by respected, I mean we can come into them, we can even go a little bit lower, but if the candle closes below here, then I don't consider it to be supportive anymore, right? So you could think of it as support, right? So here we have another one, right? And so very basically, now we have a third rule of engagement. Not engaging with price until we hit a fair value gap, right? So these two kind of coincide with each other, because you can start taking trades once a swing point gets hit, or you can start taking a trade once a fair value gap gets hit, right? So even with something as simple as these three rules, it's going to make a significant difference because now you're actually creating something to where if I want to test this out, right? If I want to see how accurate this makes me, I would go and back test it. But you're not gonna, if you're just back testing your intuition, I mean, you're not getting reliable data. I mean, if you can trade for 5 years in back testing and you have a consistent win rate, then good for you. But that's honestly like, for me, it's unheard of. So you want to have these, objective things that you're looking for so that you can test them. Because at the end of the day, guys, like if you're not building a system that you can test, then good luck because you're just going to be kind of shooting in the dark a little bit. So those are some things that I like to look at. Um, we can kind of talk about too the different time frames, right? What time frames should you guys be looking at? Okay, we'll make this separate. Okay, so when it comes to time frames, right? We have to understand that you can use different time frames together and you should be. You should never really just be looking at one time frame. Um, so the first things first is you're always going to have a higher time frame preceded by an intermediate time frame going into your low time frame, right? And I know guys that will just what is it? Low time frame. I know guys that will just they fucking sit on the 1 minute and that's how they trade. But they're not successful, you know? So we use a combination of three different time frames, and each of these time frames has a different purpose. But if you're a positional trader, then you would be using the monthly as your high time frame, the daily is your mid time frame, and the oh no, sorry, actually it would be the weekly is the mid time frame, and then the daily. And like I said, you know, when I'm up here and I'm talking to you guys, like the concepts still apply to these time frames, but I wouldn't necessarily uh this is not my preferred way. I like going in, spending an hour or two in the markets, making my money and dipping. That's how I like to trade, okay? So, if you're, you know, this is kind of like the patient guy, you know, if you're patient, um, if you're not in a spot where you really need the money, um, this is going to be your kind of like time frame, right? This is the long-term trader. Okay. Now the next one, we'd be going weekly to the 4 hour to the 15 minute. I like this one a lot. Um, this is it's been pretty clean for me. All of the swing lows that we were looking at, they were all on the weekly, right? So I really like that time frame. And so for example, right, let's say we saw this sweep up here. I would then go to the 4 hour, right? I see that sweep. What am I looking for next? I'm looking for some form of market structure break that can tell me a price is actually going lower. And again, I'm not gonna teach market structure break and stuff like that, but it would be right here, right? And then I would identify here's the fair value gap, the bearish one, and then I would go into the 15 minute and then I would start looking uh, for my entry up there, right? So just kind of like an example of how would we would use these interlinked time frames. Um, you always want to have a higher time frame though. That's the thing. If you don't have a higher time frame, you're kind of trading in the dark, you know, like a sniper doesn't go, you know, aiming down his scope to his spot, right? Obviously, he's not on his scope until everything is set up. He's fucking tested the wind. Like, you know what I mean? He's at a high vantage point. That's kind of like what the higher time frame is, right? Because if you can be in line with the higher time frame trend, your win rate's gonna go up. Like, simply, right? Because like if I can see, right, clearly this is very bullish price action, and I decide to be bearish in the middle of this because I saw something on the 1 minute, like we're going down here on the 1 minute, you're gonna get fucking wrecked and you're not gonna know why. Um, so this one I would say is definitely you still have to wait a little bit. Usually the trades on this using these time frame alignments, this specific one is gonna be like 3 to 4 hours ish. Um, so this I still constitute it as day trader. Um, and like personality wise, like I would say you're kind of, you know, balanced. Like you're not completely patient. Obviously, like if you're going on this, it's gonna take a couple days, maybe a week or two to play out. Um, so this one's a little bit more balanced, right? And moving on to the lower time frame, we'll be going on the daily, the 1 hour, and the 5 minute. Okay. Now this is like scalper territory because you could really In reality, with this time frame alignment, you could go 5 minute or 1 minute. Um, so this is going to be the scalper. This is going to be if you're really impatient. Um, you switch positions a lot, right? So if you're very impatient, it would suit you to be on a time frame that you're going to be able to get out really quick, right? So once again, we can now add another thing to our rules of engagement, that we can only engage when the time frames are aligned, right? Now, we're not really going to talk about what that looks like here, at least right now. But if you guys play around with these time frames, like I said, start implementing these rules, like your win rate's going to go up, right? Um, Now, obviously, like there's things that we can put on here too, like, you know, I'm not I'm not gonna trade with an insane amount of leverage, you know. I'm not gonna be going in with like a 1000x or something like that, you know. Have these rules so that when you do break one of them, when you go back and you start journaling, which if you're not journaling your trades, once again, you're doing yourself a great disservice. Um, you can actually hold yourself accountable. You can go back to the rules and say, well, why did I lose today? Was it because I broke one of these rules? Or is it just because my system didn't pan out, right? Losses are a part of the game. Um, you don't want to be like, you don't want to not have these rules and then you take a loss and you don't even know why. You know, you just took a loss and that's it. Because in reality, the mindset shift of what is a novice trader to a professional one is the novice is going to think, if I made money today, I won. If I lost money today, then I lost. But a professional trader is going to think a little bit differently. They're going to think to themselves, did I follow my rules? Did I follow my system? Because once again, as we continue on in these little mini series, you're going to see that that's literally what it's all about. Did you follow your system? Because the technical information that you guys need to be able to trade is not a lot. You honestly don't need that much stuff. Like I've had students that I maybe taught them for like 2, 3 weeks and they were already making money on their own. Now, not everybody does that because the hardest thing that you're going to encounter with trading is it's going to bring out all of your demons. If you're if you're a fucking greedy guy, like it's going to show up in your trading. When you look at your loss and you journal it, you're going to be the guy that you were up. You were up 2000 bucks on your funded account. Maybe you only needed to hit 3000. And so you held that $2,000 plus position in hopes, you know, you got greedy, you wanted that extra thousand. It ended up going against you, and now you lost, right? Um, so this is why accountability matters so much, and for you to be able to have something to hold yourself accountable, because that guy that loses like that, and he doesn't have a rules of engagement, when he goes back to the drawing board, he's not going to be able to say, you know, I held on to the trade for way too long. I was looking for exorbitant amounts, you know, instead of being a little bit more, you know, fluid and really trying to not go so fast, right? So, with that being said, this is kind of like where we're gonna leave off in terms of the rules of engagement stuff. Um, Whoops, mic disconnected. Um, and we're actually just gonna start reviewing some charts for the last 20 minutes. And if you guys have questions now, um, this is the point where you'd want to be asking, or if you guys want to look at you know, different coins, different assets, whatever, There's a lot of exciting stuff going on right now. But let's see. Do you use Fibonacci to decide the bottom? Um, there is some pretty cool Fibonacci stuff to be able to decide or kind of like anticipate where the bottoms are most likely going to be. And that's with measuring manipulation legs. So something like this, why would I call this a manipulation leg, right? To move up, and what happens right after? We shoot all the way back down. So if price's true intention was to go all the way lower here, then we can say that this is the move that was manipulation. So I'll kind of like flash the settings on here if anybody wants it. Um, wouldn't use those as like more advanced, but yeah, if you measure the manipulation leg, you can start to look for um, where bottoms are most likely going to be. So for me, I see the 2 and 2.5 standard deviation. I look at these as like zones. Like anytime price is coming into here, I'm looking for either a retracement back up or a full-on reversal. So I do like using that. It is a pretty important thing that I use in my repertoire. Um, and yeah, so like the next move lower, I would be looking in this area and I would be looking for maybe this low to be taken. So yeah, you definitely can use the fibs very very cool ways. Um, do you think we fill the CME gap at 88K in the near short term for Bitcoin, or is that gap invalid? Um, I don't really like, I mean, we're not that far from 88K, and we've already filled this for value gap, but I honestly don't pay too much attention to CME gaps. I know that like a lot of people on crypto Twitter, like, I mean, for years you always see stuff about people being like, oh, there's a CME gap above, below. Um, you would have to like grab the percentage of how often does that CME gap actually get filled. For me to want to implement it is something that like I'm interested in, you know. Um, there's like there's different people that they'll get the statistic of like, for example, when Asia session closes green, the likelihood that the whole day is going to be green is like 60%. And then somebody will build a system off something like that. But yeah, I don't really look at CME gaps too much. I don't pay too much attention to them. All right, so if there are no other questions, if you guys think of some, ask them. And I'm just going to go over what I think about crypto right now. And I'm also actually going to talk about indices too, because, you know, in the next session, when we start adding a little bit more to our rules of engagement, one of the things that we're going to want to implement is being cognizant of what's going on here in uh, the world of indices. Even if you don't trade indices, it doesn't matter. Y you have to understand that this market has so much more liquidity than crypto, and being in sync with this asset class and crypto is very important because they're both risk on assets, right? A risk off asset would be something like gold or silver, right? Which are also doing, you know, like just absolutely wild. Um, so when we look at this kind of when we look at NQ, the Nasdaq, right? I'm bullish on it, but at the same time, if I zoom out and I kind of like remove all of this right here is just consolidation to me. It's not there are no like really big moves after this first one, right? This is kind of like the established range, right? And one of the ways that I was able to time the bottom so well last year was because we had something similar. We had a consolidation, right? And some of you may be familiar with power of three, which is accumulation, manipulation, and distribution. This is another thing I really like to use. Um, this would be our accumulation, this would be our manipulation, and this would be our distribution, right? And so when I look at crypto, right, and I have this kind of idea in mind that, hey, we may be doing the same thing. Maybe we won't go as low because this was the tariff stuff. But I don't know. Maybe we might have a pretty nasty fall, and it could probably be because of all of the like foreign, what you call it, like um I guess like all the foreign conflict that's going on right now with like Iran and Israel and stuff like that, Venezuela, China, all that stuff. Something, there could be an event that makes us put in that manipulation and then go higher. So when I come back to the crypto chart, it just looks a little bit sped up to me right now. Here's our accumulation. We're still in manipulation. And if you guys can identify when you're in manipulation and you pay very close attention to when it's coming to an end, that's going to be how you capture distribution. I literally have a tweet um, from all the way back here where I called this the accumulation, I called this the manipulation. Once I saw the sweep, that's when I posted something like thank you Trump for the generational entry, right? And it was because I was able to identify, you know, where we where we were at. Um, and when we talk about accumulation, manipulation, distribution, you think about it in quarters, right? You have accumulation, manipulation, distribution, reset, right? And this concept goes very far conceptually because this could be Asia, this could be London, and then this could be New York. But in our case, when we're zooming out and we're trying to get a feel for how this year is going to pan out, instead of using sessions or instead of going like Monday, Tuesday, Wednesday, we're going to think about it in terms of the quarters of the year, right? This is Q1, this is Q2, this is Q3, and this is Q4, right? Because if you look, th this is literally exactly what happened last year, right? December and January kind of make that high, right? Very similar. Then we shoot back down. We get into quarter two, right? The manipulation finishes. We start moving into the third quarter and we start getting that distribution. So as you guys can see, we put the high last year quarter four, or yeah, last year quarter four. So quarter one, we're in this like manipulation, right? So what am I waiting for once again? I'm waiting for one of these lows to be taken, one of these weekly lows to be swiped, and then I want to see some move up. If I can start to see that price is going to start to curl up after that, I'm going to be of the opinion that the manipulation is probably ending and moving into distribution, right? So I'm bullish. I'm bullish for the year. Um, but you need to be, it's not enough to just be, bullish and expect to make money. I mean, I guess unless you're just going to be stacking, you're going to be stacking spot, then okay, fine. I guess 88 CME gap will fill. You're totally right. Pure 3 is a cool concept, very useful and proven strategy. Yeah, yeah, for sure. I mean, it goes really far. Like even in every single candle, there's accumulation, manipulation, distribution. Every single one. Um, so in terms of like price targets, let's see. And we're gonna use the fib, right? And like I told you guys, fib is actually really good for tops and bottoms if you use it like this. What did I tell you guys that I look for? Manipulation leg. How do I know that this is the manipulation leg? This was the last move lower, swing to swing, before a major move higher, right? And then we hit the 2.5 standard deviations. What do I look for here? Retracement and reversals, right? Um, so this is it's a pretty deep retracement that's going on right now. Uh, but my price targets are still the same as they were for, you know, what I thought maybe we would hit this year, but I guess it's gonna be, or last year, sorry, but I guess it's gonna be this year. I'm gonna be looking for 150K Bitcoin. I think it's super doable, especially with the fact that um Trump is like kind of trying to accumulate as much Bitcoin as possible because China has kind of already won the gold and silver race. That's why silver looks like this. Uh, China is just building like a massive stockpile of these two. So I really think that Trump is trying to kind of circumvent that by using crypto, especially because it's more convenient, a lot more accepted now. For ETH, we're gonna do the same thing, right? We're gonna look for that last move lower. And once again, like I'm not cherry picking. I didn't even have these up on my chart before we started. But 2 and 2.5 standard deviations, what do we have there? Retracement slash reversal, right? To T on both of them. Um, 6,000, that would be honestly that's like my conservative, um, more like my conservative target. I feel like it could maybe go to like 7, 8K. Um, but yeah, that's what I would be looking on ETH. And then Sol, I'm really curious about Sol because I don't know if, like the meme coin craze is gonna be fully over or not, or maybe people will just switch to BNB. But once again, look at these fibs. Like, I mean, they work like magic, right? To the T, to the tick. Uh, 350, that would be my modest um kind of target for Sol, but I do think that we could get 500, especially if we can get the level of attention that we had at its peak, which it's kind of tough to do considering the President of the United States and his wife launched a coin on it. Um, but yeah, I still do think that it's kind of like you look at what Ethereum is to Bitcoin, that's what Sol is to Ethereum. So I feel like it will always have a spot in that top three, um, as well as BNB. Um, so yeah, the those are my thoughts for those three. We can look at gold as well. I know there's a lot of people talking about gold, and guys, honestly, like when you see a chart like this, like bro, this is not a shitcoin, first of all, and second of all, think about like the simplest way that you could improve your win rate is I'm gonna look for a chart that looks convincingly like it's just going up or just going down, and then I have my bias set, right? Do you guys want to short? Do you guys want to short this? If your answer is yes, it's the wrong answer, right? You, this is like a chart that I would look at, and I'm like, bro, like I'm gonna have easy longs until this is done playing out. Um, which, I mean, with gold, it's just such a valuable asset at this point. I think it goes to 6,000. Yeah, I really think that it goes to 6,000. I mean, it's just been so strong and it had a really long time just consolidating. And once again, right, like more PO3 stuff right here. Accumulation, manipulation, distribution, right? And we accumulated for, what was it, like for 700 days, right? So that's why we have such an explosive move on top of like just the utility of gold in general. For silver, I mean, like these charts are just ridiculous because like think about it, we're on a weekly chart, so if I count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, out of the last 10 weeks, there's only two bearish candles in here. So if you were just looking for longs versus the person that's trying to look for longs and shorts, like you gotta ask yourself, who's gonna be better off? Um, because as cliche as it is, um, trend is friend. You don't want to be going against trend. Don't try to be the guy that picks tops and bottoms, especially when you're still trying to become a consistently profitable trader in the first place. But yeah, those are exciting assets for me personally. That's what I'm gonna be looking at. I usually don't trade uh, too much in January. I mean, I'll trade, but I'll just be very selective simply because of what we talked about earlier, right? That Q1 is usually like that, and that's a lot harder to trade than something like this, right? Um, but things have been, there was some good trades today on the table. Um, NQ did a pretty nice move, but generally speaking, I try to be a little bit more reserved. But yeah, that's the move from NQ today, which if you caught that, like that's money right there. And just like I said, right? Even though this doesn't really look like accumulation, Asia, accumulation, manipulation, distribution. Right? So you guys can start to see all of the things that we've been talking about, like they're helpful. I'm really giving um some good information. So that'll wrap it up for today's session. I have it recorded. It will probably be posted like on the ATS Discord, um, and their YouTube channel, I'm assuming. Uh, but yeah, if you guys have any questions, so this is gonna be last call. And if not, yeah, I appreciate everybody for coming out, and I hope you got something from this. Here's the name of that last indicator, which you don't even need the indicator, honestly. You could just map it out on your own, but just for the key times. ICT kill zones and pivots. Alright, cool. Well, if there's no questions, then I'll catch you guys tomorrow, same time. Um, yeah, honestly, like take this into the charts, see what you guys can observe for yourself. Even if it's as simple as looking at those key times and look on your asset, see if I'm, telling the truth about how those key times those are usually the highest volatility points. Those are the points where you're getting most of the highs and lows being put in. Um, and yeah, come with questions tomorrow. You guys have like a very unique opportunity with the ATS here to be able to have access to people like Richard and myself, people that have been doing this for a really long time that can slice the time down for you of how long it's going to be able to take you to do this. Because it does take a little bit of time and it definitely takes a lot of practice. All right, then, fellas. I'll catch you guys tomorrow.